that Michael Burry, of The Big Short fame, is betting against the electric car maker. After a 740% gain in 2020, Tesla shares have fallen more than 18% this year and are currently trading more than 35% lower than their all-time high from the end of January. But is it a good idea to bet against Elon Musk?
Hi guys, it's Steve from Disruptive Wealth Creation here. Today we're asking the question, is it a good idea to bet against Elon Musk? The answer, in my view, is no. Watch this video and find out why. So you all know that if we want to make money, we have to carry out our own research. Today, starting from 2018, I am going to give you 4 examples of hedge managers who did not do their homework, and some of whom lost billions of dollars in the process.
Now, the big boys are coming, and they're coming with sexy looking cars at the same price point with better features, faster cars, great styling. And so what was unique for Tesla is no longer unique.
That was Jim Chanos, Tesla short, saying the big boys are coming in 2018. In other words, the legacy automakers like GM, Ford, VW and Jaguar. Well, in that year, none of the competition sold more than 150,000 electric cars each. In fact, Tesla had sold 500,000, and they were actually taking carbon credits from these companies through lack of production. In 2018, the shares surged by 41%, but then dipped after a New York conference meeting where Elon Musk fell out with the Wall Street analysts, saying their questions were boring, bonehead, and not cool. It was then that Jim Chanos jumped on shorting Tesla. However, after that episode, Chanos started hemorrhaging money, and by December 2020, Jim Chanos had slashed his Tesla position. And then by January 2021, he had changed his position from shorting Tesla into a put position, something we will discuss later. It is estimated that Jim Chanos has lost over $175 million, if not more. However, he still goes on, and he still hasn't given up. The second short seller we want to look at is Gordon Johnson. He has been shorting Tesla since 2018, still losing money, but will not give up. Here is what he has to say.
I always said Tesla has a demand problem.
Wrong. Tesla has a supply problem, not a demand problem. There is a waiting list for Tesla cars, and it is growing. I'm not a Wall Street analyst, but you see, this is what happens. Let's just say Tesla produces 20,000 cars in China. It then decides to send some of them to the USA and leave the remainder in China. So what does Gordon Johnson do? He looks at the figures in Europe and says VW cars are selling more cars than Tesla. Yes, VW cars are selling more cars because people cannot buy Teslas. So basically, he's missing the point. The demand is there, but the supply is an issue.
We think they have a cash flow problem. And as that cash flow burns through this year, we think people are going to focus back on the fundamentals, and they're ugly.
Gordon has got to be one of the best comedians on Wall Street.
We'll see what happens this year, but when looking at the facts and not looking at an aspirational story, demand for their cars is collapsing in Europe, the USA, and China.
Right, guys, before we move on to Michael Burry, we need to talk about our third loser, David Einhorn. How much did he lose? Let me move my head and show you. Well, he lost all his money there because he invested in General Motors that dropped 3.4% in 2019, and he lost on Tesla because they went up. His Greenlight Capital Fund lost 25% of its earnings, and he had to write a letter to his shareholders telling them that. Right, now we can talk about Michael Burry and why he may be joining the list of losers. The first thing to note is Michael Burry is betting against Tesla with options trading using a put. So what is a put? A put is a contract between two parties for a fee. In this case, giving Burry the right but not the obligation to sell the Tesla shares at a price of which we do not know before the expiry of an agreed date we do not know. So, if the price goes down, Burry could buy the stock at a cheaper price and make the person who signed the contract buy the shares off him for the agreed more expensive price and make some money. Or he could sell the option for a price higher than he paid for it. In this case, we do not know when Michael Burry bought the option, what price was the strike price, and when was the expiry date. The only clue we have is that the option was purchased at the end of Tesla's Q1 this year, so the price range of the option would be between $563 at its lowest and $883 at its highest. Because we do not know the expiry date, it's possible that the date could already have passed. Assuming Michael Burry's options are still live, is Burry going to win this bet or not? Well, firstly, statistically, if we look at 2020, short sellers lost $38 billion. So the question is, was Michael Burry a loser in 2020? He was definitely shorting Tesla in 2020. Chama Palahapitiya points out that there are a lot of retail investors, people like me and you, who have access to a lot of information. In fact, our knowledge is in parity with many people who work in investment organizations. We see things as they are, looking at growth stocks, looking at Tesla's new factories, knowing that Tesla is a tech company and not a car manufacturer. We see the battery innovations they are making, the gigapress, and so much more. We do not get lost in the technical mathematics of balance sheets. We are forward-thinking, like ARK Invest and Cathie Wood. We don't get obsessed with looking backwards. So let me know in your comments, as a retail investor, are you one of those? My next video comes out on Saturday. Stay safe and see you soon.